But first, to the markets and how the major averages finished last week. S&P 500 closing out its worst week since November, but still just 2% off of its record close. The NASDAQ falling for a fifth week in a row, its longest losing streak since May of 2022, and now sitting nearly 6% below its record close. The Russell 2000 slightly lower. Now, tech stocks taken the biggest hit on AI jitters. All of that is where we begin this afternoon. I want to bring in RDS Wealth President and CEO Dale Smothers. Dale, look, I want to zone in on software with you and these software companies because they really have taken the brunt of this AI sell-off. Some say that is an unfair situation that's happening with investors. Do you think that these software companies can adapt to the changing landscape that's happening in the tech sector? Because frankly, it seems to be a little bit of an overblown reaction to the advancement we're seeing when it comes to AI.
Cheryl, I agree with you wholeheartedly. I think this is an overreaction. It's as if when AI innovates, Wall Street holds a funeral for the old guard. Software was one of those last week. We saw it happen with financial services. We saw it happen with trucking closer to the end of the week. The reality is these software companies are going to continue to innovate with the new AI announcement of, let's say, tax software specifically, or the new AI announcements that are consistently coming out. We've got companies like Intuit that sold off. That type of sell-off, investors should be looking at that because what's likely to happen are these incumbents buying up the new companies with that innovation that they bring to the table.
Yeah, you mentioned Intuit. Obviously, navigating the tax code is difficult to your point. But you're also looking at DocuSign, and I want to get your take on that because you're saying the PE is a little bit higher than you'd like to see right now.
Yeah, Cheryl, DocuSign is one that we've got our eye on, and if it continues to fall, PE ratios, if we have a little bit better than maybe expected earnings, PE ratios get into where we would like them to be. We might pull the trigger on that particular company. DocuSign, another one that took a big hit due to an announcement of new AI innovation. But you've got to believe companies like DocuSign, Intuit, they're going to adapt to what is available to them, and they've got the cash flow necessary to even buy or acquire these new companies. DocuSign in particular has a sticky customer base. They've got relationships all over the country.
All right,
you've got to imagine that a company like that's going to keep those clients in their pocket.
And certainly, to your point, look, taxes aren't going away, but, can AI do my taxes? Maybe it can someday. It can't do it this year. So maybe that, again, that sell-off or that pressure on these names has been overblown with a DocuSign or even with an Intuit. But I want to talk about 2026 so far. We've had a lot of volatility in the market. Do you think that because it's a midterm election year, do you think that volatility is going to continue? Because we keep seeing policy affect the markets. We keep seeing policy feed into what's happening with whether it's on the defense side, whether it's in energy, et cetera. How do you think that investors should kind of approach what is going to be a monumentous political year? We could see Congress could go to the Democrats, the Senate maybe, not likely, go to the Democrats. How do you, is it noise, or are there things that we need to be looking out for in this political year?
Yeah, I think it's not only noise, but there are things that we need to be looking for, opportunities perhaps to take advantage of. To answer your question, I do believe that this uncertainty continues. And if the market hates anything worse than an outcome, it's the uncertainty of the outcome. I think that you've got to look at the history books here and realize that midterm years are historically volatile. But the 12 months following those volatile years in the midterms typically end up being positive for the market. So look for opportunities here, Cheryl.
Well, the reason I ask that is because there's a great piece in the Journal this morning by the editorial board, and they talk about the tariffs. And, they actually use data coming from the New York Federal Reserve, and it's with regards to import prices. And I think this really does matter, and it's worth looking at, because if you examine import data to look at whether foreign suppliers cut prices in response to the added tariff costs that came from the administration of 2025, basically 94% of the tariff incidence was borne by the United States. And so when you have the political question, it's affordability. On the market side, it's profitability. How do you weigh that?
Yeah, you know, affordability and profitability. I think artificial intelligence, believe it or not, to come full circle, is going to help us with this. You've got imports of things that artificial intelligence can't quite help at this moment, for sure. That is going to be the bottom line for not only investors, but the bottom line for consumers. You've got to believe that this tariff agenda is America first at its heart.
Yep.
And if you believe that, you hope that on the back end of this, things become more affordable. Clearly the writing is still not complete. That book is still being written as we talk, Cheryl.
Well, and I think on a macro level, what you're seeing is the rotation out of AI and tech and things like that, maybe software overblown, as we've already discussed. But on the other side of that is you have investors that are looking to other parts of the economy. Maybe these are companies that aren't saying, I promise that I'm going to give you ROI in this amount of time. Or it's a company that's like, I have delivered. You know, think of your oil companies, think of your utility stocks, things like that. I mean, is that where you're kind of putting your money to work as you look at the rest of the year, the landscape that's out there?
For sure, you mentioned utilities, you know, which is a great way to pivot into this potential AI need for essentially electricity, right? The power that it takes to demand there. But this broadening out that you mentioned in the market is a powerful thing for investors. We've got to continue to see this broadening out play, which is why one of the things that we like to do here is be overweight the major indexes. SPY and QQQ are two very overweight positions in our current portfolio as we see this cyclical trend continue away from artificial intelligence and technology.
A final question to you, just because, you know, we do have another Fed meeting coming up. We're going to get the minutes later this week. We're going to kind of get more of a window into their thinking. And then, you know, Friday, we're going to get the PC price index. That's obviously a big gauge of inflation. We got some very good reports last week. CPI on Friday. You had the jobs report on Wednesday. We've had some come on and say, you know, these were misnomers. You're going to get a revision in that report for January. Others are saying, no, the economy is firing. Policy is working, and that we should be bullish on the United States.
It's the perfect Rorschach test right here. Right? You can look at that piece of data. You can look at the 130,000 jobs added in January and say, man, that is incredible news. Or you can look at the revision that took place in 2025 and say, well, we didn't actually add many jobs. I think, again, the story will be written here. An America First agenda is going to impact the consumer, whether or not it impacts or benefit the consumer, whether or not it benefits the market. That is still something that we've got to keep a close eye on. And the reality is this K-shaped economy has to come under control. We have a president right now that is America First. And tightening up this idea that we have to make things profitable for the consumer. 100%, Cheryl.
And pivoting back to my last point there about, you know, the tariffs, willing to pivot when needed, in particular as it affects the American consumer and it affects prices. And I think that that's a very key part of the whole conversation. Dale, thank you so much for being with me today. I really appreciate it.
Always a pleasure.
All right, let's keep the conversation going.